the cloud. There we go. All right. Okay, so let's get started. I said I was going to get started at 5 after. We're 12 after. We got lots of people in the room today, so thank you and welcome. Love when we have you know, it could just be me, but I love it when it's not just me, and I love it when other people are here to bring your questions. No wrong questions, no dumb questions. That's how we learn. And chances are, it's kind of a standard thing to say is that, the question you have, maybe someone else has that question and they were too shy to ask, and you did them a favor by asking it. So that would, like I said, more than welcome. If you want this to kind of keep things moving, you can put the questions in the chat, and then we can address them as we get going. So right off the top, my name is Dwayne Richards. I am a licensed CPA. I am located in Toronto, Ontario, Canada. I spent about 20 years in corporate accounting. I didn't know any of the stuff that I'm about to talk to, because I was just going to be a corporate accountant and not specialize in tax. And I was just going to do, manage AP and AR and do some financial analysis, budgeting. I did all that stuff. I can still do it. Just one day somebody decided I didn't do it well enough, and they told me don't come back to work. So that was about 9 years ago, and that set me on a journey around personal development, self-employment. I ended up getting licensed as a financial advisor. I've done that for about 6 years, and now I'm actually letting my financial advising licenses expire, because 4 years ago I started focusing on tax, mainly around personal income tax, T1, mainly here in Canada, T1 returns, working with individuals, sole proprietors. And then I started bringing on corporate clients, and then I quarterback it, but I actually outsource my T2 returns to other accountants who don't necessarily do this. They're too busy doing, and they don't necessarily have time to do the front end marketing. I love getting out into the community, and that's about 4 years ago. I took over when the guys stepped down from the Canadian CPA Network meetup group. I stepped up and I said, hey, I'll run it. I have no problem. I was pretty shy at the beginning, but after about 3-4 years, get better at it. We get better by doing it, right? Like anything, you could read a book. I see people, new accountants or new bookkeepers, like, how do I took a course. How do I, it's like, just gotta go get a client. And I started my first year, I had 7 clients. Next year I did 37. The following year I did about 65. And right now we're just close to 200 combined kind of accounts. Inside of an account, maybe multiple tax filers, but about 200 accounts. And it's just, you just keep moving forward. And the best just from anyone here who wants to build a business, 2 things that worked really well for me was is running meetups. Doing this, the first, not too many people showed up. Even last month, I think maybe 2 people showed up. But look at today. Today we got a whole screen full of people, and it's just being patient, advertising. And the key is don't think you're annoying people, but send out polite, gentle reminders. And when you send out reminders, people show up. Sometimes people are just, hey, it works perfectly fine. Look at full room of people today. And today at 12 o'clock was perfect for everybody that's here. So welcome. Thank you for joining. Just got someone else who's wanting to come in. Always fun when you're doing it yourself. You got to watch the waiting room. So yeah, today's topic, I said, well, sometimes it's good to kind of give what's like, we could just talk taxes and we just jump all around the place. But we're winding down to the end of the year. It's I think I counted out, there's like 56, don't shoot the messenger. There's about 56 days left in the year. So we got 56 days between now and December 31st. And even one of the strategies one of the tips I'm going to share with you today, you don't even have till December 31st. You got about till like December 24th or so. Don't worry, it's not writing a letter to Santa. It's something related to investments that you can't wait till December 31st because the banks need time to clear it. So that's going to be one strategy. I got it broken down. I have I have very detailed notes. It's on a recipe card. I wrote down 5 things about 5 minutes before the meeting. stuff that I know, but I'm like, let me just put them on a piece of paper so that at least there's a guide so I don't forget them. I've kind of broken them down into some stuff that's like some personal tips. So just if you're a taxpayer in Canada, regardless if you're a business owner or not. So probably 3 of these. Let me just do a quick count. 1, 2, 3. 3 of the tips are for just everyday taxpayers, including business owners. One of the 5 tips is for business owners. And then the last one is more for people that are running corporations. So I'm not sure just if you are running if you're part of a corporation or own a corporation, if you don't just type in the chat corporate, you just put in corp, C-O-R-P, that would be great. Doesn't matter to me if you do or don't. I'll start with that one first because maybe it doesn't really apply to anybody in the room. Might apply to, look at that, there, always applies to, look at that. Never assume that no one here has a corporation. There's a couple people that have corporations, so that's fantastic. Welcome. Just gotta let Gregory into the room here. So Greg's coming in, probably was eating lunch and a little bit late, but that's okay. He missed all the intro fun, but he's been here before as well. So for the first tip today, it's around for anyone with a corporation, and there's first depends, but doesn't, on what your corporate year end is, because with a corporation you can choose a calendar year end, so it could be January to December 31st as your calendar year end, but your corporation could also be, you can have a different date. You could be like July 1st to June 30th. That's your corporate year end, and that's for corporate taxes and other stuff. Other things work off the calendar year end, which is, anyone know? Payroll. You're issuing T4s. Payroll is based on the calendar year, January to December 31st. So if you're running a corporation or if you're working with clients who have corporations, you have to figure out before December 31st, are you going to pay yourself? Maybe you already are. Maybe you're already running regular payroll and you're paying yourself on a bi-weekly, monthly basis through payroll. Then that's fine. Just continue through to December 31st. You're going to issue a T4 in February. However, there's some people that kind of wait and they do I sometimes recommend this for new corporate people, is just kind of do a draw. You do like a owner's draw during the year. And kind of as you go through the year, you kind of figure out how much is expense reimbursement, how much am I going to take as salary, and then you can actually do not adjusting entry, but you can do that. You can book that salary before December 31st. So then that gets recorded on the T4 or the T4A. So the first part is, so the first tip for today is for corporations is, and it's really a bit more than just, not a little bit more than just salary, but really around owner and employee compensation or remuneration. Because even if you're going to be declaring a dividend, dividends should be sorted out, because again, you're going to be issuing either a T3 or more T5s. And you want that done. You don't want to wait till February. Even though T4s and stuff can be done in February, don't wait till February to do that stuff. Do it now. Do it in like November, and let yourself have Christmas. Like, no one wants to be like, especially accountants. Like, don't make your accountant, if you're dealing with an accountant, don't make your accountant like on like New Year's Eve trying to decide if you're going to declare a salary or not. Please be nice. Be nice to your accountants. So that's my first tip for you for today. So if I jump over now to kind of 2 tips for if you have a business, still applies, but then also apply if you're not just, but if you're an employee. So if you're an employee, you work for a business or you work for someone else, and you receive a T4 on an annual basis, and you're going to file a T1 personal tax return. Two things that you can do, actually 3 things, sorry, my apologies, 3 things that you can do before December 31st. Anyway, I always like to survey this, just make sure everyone's staying awake. Anyone have any suggestions on one thing that you can make sure you do before December 31st? If you do, you could just type it in the chat, and there might be a prize. And also remember, I did post it. So remind me, one lucky, oh, John, so smart. One lucky participant today is going to win a copy of Doug Collins's book, How to Write Off Everything. Usually I have a copy of it, but I don't have it hit with me right now. But make sure before I have a quick thing that I will do shortly, like about 12:30 at 1/2 past, I will do our little, not little, big draw, a big prize, giving away a big prize at 12:30, just in case people need to leave early. I won't make you stay to the end and be bored. But if you need to leave early, get back to work or do something, go eat lunch, I will do the random draw at 12:30 for Doug's book. Colleague of mine, you can also get it on Amazon, and I'll share some of that in a minute. Okay, so so John is the winner. Well, he's not necessarily the winner of the book, but he is correct. It is on my list under stocks, tax loss selling. Yes, so obviously the stock market is kind of goes up and down, up and down, up and down, and sometimes it goes down more than it goes up over a period. So tax loss selling applies to if you have investments in an open, non-registered trading account. Tax loss selling does not apply in your tax-free savings account, and tax loss selling does not apply to your registered RRSP account, or if you have, like, I don't know, if you have a pension account or a LIRA account and you trade inside that. Tax loss selling does not apply to any of those. It only applies to a if you have either a managed or a self-directed open non-registered account with one of the banks. So example, and what you're doing is you're actually triggering a capital loss. So for example, if you're owner of, say, one of the, what's a good, I'm not sure what, they're all kind of down right now, but say one of the banks, the banks were up, but the banks are kind of down a little bit. So maybe you bought the stock earlier this year or 2 years ago, bought it 5 years ago, probably it's still up. So it's more something that you bought this year and it didn't quite pan out. And if you sell it, you're triggering a capital, not a capital gain, you're triggering a capital loss. And that capital loss can be applied against capital gains. The reason you need to do that before, and this is the one that you need to technically do before Christmas, because the banks need time to process it. The trade needs to get processed through the exchange and all that stuff. If you try and do this on December 31st, you're too late. If you do it in January, you could do it in January. It just, it applies to 2023. What happens is it goes in and it's on, it'll be issued on like through your T3s and T5s. It goes through like your trading account will issue a tax slip, and that's why it needs to be done before December 31st. And specifically, most times the institutions are going to send out a reminder to you that kind of the cutoff dates, maybe like the 26th. But that's why I say if you start looking at it, you can even do it now and start to look at it, you know, and process it, put your orders in around the 23rd, 24th. I love it when people put some stuff here: individual tax returns, RSP, excess contributions. Yes, yeah. You also have to be, you have to be careful around the next two I'll talk about. So that was tip number 2. Let me just make a note here. So tip number 1 was corporate. Tip number 2 was tax loss selling. Tip number 3 is around, there's 3 in 1. It's tax-free savings account. So your TFSA, so tax-free savings account. It's your RESP, which is your registered education savings plan, as well as your RDSP, which is your registered disability savings plan. Those 3 products or buckets, investment buckets, all work off of the calendar year, January to December 31st. So your annual right now, I think your annual tax-free savings account contribution is about 6,000. I think it went up. It's going to go up a little bit, but roughly a good ballpark number, 6,000. Now, when you go into your My Account, you log into your My Account with CRA. There, you'll actually see both your RRSP contribution carry forward room, as well as your tax-free savings room. And you can contribute, and that contribution works on a calendar year. And so same with RESP. RESP, you have an annual contribution that you can get back grant money, and that works off the calendar year. So if you have kids, right now my oldest son is just started his first year at Western. So this year we actually withdrew money. So also it's both deposits and withdrawals, because you kind of want to manage the withdrawals out of the RESP, because withdrawals and kind of the earnings and grant money becomes taxable. And it's good to do some of that in this first year when he has tuition, not just do it next year when there's two. And then the third is RDSP, which is registered disability savings programs, which is, again, if you know someone or someone in your family is approved disability, and they're already getting the disability tax credit, then they're eligible to actually open an RDSP. And same thing, that there's annual contributions, not necessarily limits, but contributions that can be matched. So it's, again, one of those things that good idea to do it on an annual basis. Ooh, so much talking. Let me just do a quick read also around TFSA redemption and contributions. You don't want to over contribute. Yeah. And then the nice thing is, so here's what I've, again, kind of learning from personal experience. So for example, we sold our condo when we purchased a new home. That sale is going through in about a week and a bit. And for some of the deposit money, we actually are withdrawing money out of our tax-free savings account. So I'm going to be I've withdrawn it already. I withdrew it last week. So it's in my bank account. Now, the nice thing is with a tax-free savings account, you don't lose the contribution room. So by doing that withdrawal in November, I get that room back the next calendar year. So in January of 2023, I'm pulling out, I'm not sure how much I'm pulling out in total, say maybe about 40,000. I'll get that contribution room back in January the next calendar year. So also, it's one of those things, if you have some money, or if you're looking to kind of take some money out of your tax-free savings account, good idea to take it out in December. You'll get that contribution back in January. So hopefully that makes sense. Does all this stuff make sense so far? It's kind of logical. Pretty logical. It makes sense to me because I talk about it, but does anyone have any questions so far? Yeah, it's great. Thanks. And John's on the ball here. So John's posting a bunch of stuff there. So thanks, John. I much appreciate that. It's good to have people that are in the know as well. So thank you. All right. Richard, so that was
Richard. I just wanted to ask, when you were talking of these the salaries for self-employed, if the director just took the money during the year, because I know some of my clients, okay, look, they want to be taking money as long as it's available, they don't want to wait until the year where we do determine what is their salary. So what happened in terms of filing? If you took all those money during the year and the payroll wasn't prepared, you did not file your payroll. And then as of December, when you are taking money, total you're taking about 35,000, 40,000. So what do? Do you just file it once, or you now go and break it down and pay penalty for late filing?
Yeah, no, it's a great question. So generally what happens is I've done it where I've just filed. I don't do a lot of payroll. So I would not classify myself as a payroll expert. What we have done is, say, like a dividend you can just declare once. Yes. We've done it where we've issued it as like not so much as a salary, but as a consulting fee, and then issued it on a T4A, and we just kind of booked 40,000. In doing so, we're not triggering any EI or there's no CPP. So but you can do it. You could do a lump sum salary transaction, and you could just go to the CRA website, and it would say, hey, I want to pay Maria 30,000, and it would calculate, say, what the CPP calculations would be. And that's only if your business is registered. You have to register the business for payroll, because then if the business is registered for payroll, then that means you're going to calculate and remit both CPP, potentially EI, but if you're the business owner, you can be EI exempt, but you're going to be paying income tax and CPP. But first off, you have to make sure, even if it's a sole proprietor, you have to have the business registered for payroll taxes, which is similar. You do that in a similar way as HST. You get a federal business number, and then that business number you can register for HST, GST, and then you can also register it for payroll taxes. Probably confusing more people, but don't worry, I'm going to be dropping a link where you can always jump on, book a one-on-one call with me if you have more, because today's session is not gonna, you're not gonna give you enough answers to do it, like to DIY it, to do it yourself. But it's more so just to kind of get your thinking, to say, hey, that's interesting, I'd like to know a little bit more about that. Then we'll do some of that. So, all right, so it's 1:30, so we got 3 of the 5 done already, which is fantastic. We're chugging along. We got two left to go, really. So there's a couple of things I'd like to share with you. Also, one is the book giveaway. So one of the tools I started using for my business, I'm just kind of scratching the surface with it, but it works. So I just want to give you don't worry, I'm not selling, there's nothing for sale on this. It's just me sharing a tool that may be useful if you're a business owner, maybe of use for you. And what it is it's WhatsApp and WhatsApp for Business. There is a separate app on your phone, WhatsApp for Business, that's different than just the basic WhatsApp. Now, if you're just using WhatsApp, that's fine as well. And what I'm going to do is, in the comments, I'm going to put my phone number, and all you have to do, from WhatsApp, I'm not sure if people use WhatsApp or not, but I'm going to put my phone number here. And all you have to do, I just had to remember my 859-5865, trying to talk and remember my phone number all at the same time. And then all you have to do is just send me #book. And then from that, whoever does that, I will pick one of those people, or maybe all of them, depends on how many people send me the #book. And I'll get in contact with you, obviously through WhatsApp, super easy. I'll just get you to send me your address later, and I will mail out a copy of Doug's book, How to Write Off Almost Anything. Doug's not he's a tax nerd, self-professed tax nerd. He's based down in Nova Scotia. And during the pandemic, he's a network marketer who does tax returns for volunteers. He volunteers to do tax returns. And he decided he would write a book based on his experiences with CRA. He actually went to battle for himself. He went to battle 3 times, took him 3 times. And then he finally won his battle with CRA because they said his network marketing business was not a business, and they were rejecting all of his tax deductions. On the 3rd try, he sent them a big box of this big of all of the receipts and backup. And they finally said, yeah, we'll accept your deductions. So he wrote a book about it. It's not about how to do taxes. It's about how to prepare your tax file, either to do taxes yourself or to prepare your tax file to then give to the accountant. Really goes through great detail what's tax deductible, applicable both in Canada and in the US. So not to oversell it, I'm not selling it, I'm giving one away. All you have to do is you just have to send me a text on WhatsApp.
Excuse me, how do I do that? I don't know how to do it. I've got, sorry, excuse me. I got WhatsApp on my phone.
Yep.
What do I do?
Yeah, so you just go to WhatsApp and then you just type in that phone number, which is my number.
Okay.
And then, for example, it's really powerful. Hopefully he doesn't mind me showing here, but here's so someone, I think it was Vikesh, he just did it. The reason we do that is now what happens is I can actually add that, I can create a list inside of WhatsApp to say I could call it taxes, I could call it my meetup group. So now, and I could send out a note. So I have people now from the meetup group who are saying, hey, I would like updates through Meetup or through WhatsApp, because I'm not necessarily on my email and I'm not necessarily working in Meetup all the time, and I don't want to miss your stuff. Can you just send me an update through WhatsApp? So I just created a list called update. I run WhatsApp on my desktop on my computer. You can set up WhatsApp on your desktop, and then from there I can actually send out a bulk message. And it's super powerful. So if you're doing things like today, you can do it for clients. So I will, if people are interested, I will ask for first, but one of my colleagues, they're doing WhatsApp training, and you can automate it. So for example, if you want my email address, I can just go shortcut email and it will automatically put in info@dwaynerichards.com. And I don't have to type out info. I don't have to sit on my phone trying to type out info. I just go /email and it spits out dwaynerichards.com and sends it to you. Super easy. Yeah, no, it's great. It's like, 7-8 people did it already. Super.
Did you get I sent one.
Maybe.
Did you get it?
I just didn't pay attention here to everybody. But a few people did. Maybe you did, maybe you didn't. There, Greg just did it. So yeah, and if not Maureen, then we can follow up after. So
Okay.
so that's great. So one of you lucky people so far, there's 1, 2, 3, 4, 5. 5 of you have sent me. So you got a one, like, what's that? 20%, 1 in 5 got a 20% chance of getting a book. Maybe everyone will get a book. You'll have to wait and see. All right, so that's so that wasn't number one thing I wanted to share with you. It's one of those things that, Maria and Maureen and Greg, they've known me a fair bit. They know that I always come here and not over deliver. I don't like kind of say over delivering. It's like I give. Lucky's been here several Mondays, and I love just sharing stuff that I've learned, and kind of it's the next piece. Like, we learn stuff, and then if we teach it, it starts to sink in. And if we can share it, so be it. If I can help you grow your business or help you save some money on taxes, my job's done. So I'm going to ask 1, 2 extra little things. It was like give and receive, give and receive, give and receive. So one of the things I haven't done a great job in doing is asking, and I'm getting better every day of asking. So once we're done today, sometimes if you can go back into the meetup group, and you can leave a comment, or you can also leave a, it asks you like, I'll ask you to give a score, rate it between 0 and 5. And then all it does is just starts to say that that the group's real, because sometimes people need the social credibility or social proof that, hey, there's a good group, and it's not just bait and switch stuff, that we're getting good content. So sometimes even I forget, I don't go back into the app, but when I do go back into the app, it says, hey, how was the tax tip thing? And then to say, what did you like about it? And it gives you a drop down. It's really easy to do. If you could do that, that'd be much appreciated. Just helps us grow the group. Also, you can message me inside of WhatsApp. If there's other content that, like, if you love today's content, there's other content that you'd like to talk about, I might do a quick survey at the end, because there's some other topics I have coming up. And it's always good just to ask people, what is it that they're looking for? What is it? What's the questions? What's their problems? What's their challenges? Sometimes we don't want to share, but this is a safe spot. I'm more than happy to have you not dump on me, but let me know let me know what you're looking for. I'm looking to run like weekly stuff. I only do this tax one once a month, but I'm looking to run weekly stuff inside the group. And I'll bring in some other colleagues to talk about stuff. I have corporate lawyers, mortgage agents. More than happy to talk about other things. Just great if I know a little bit more about what people are looking for. All right, let's get into tip number 4. Number 4 also works off the calendar year, and that's why it's good to do it before December 31st. Probably something everyone knows, but sometimes we forget. And it is, anyone know what the next tip is? It's donations. Donations. Good timing too. It's not personal. I'm not doing anything with them this year. But it is, there's a number of different things running in November, including Movember for men's both prostate cancer, but also men's mental health. I'm not doing it this year, so I'm not going to share a link for you to make a donation to me. Don't worry. But yeah, just reach out. A number of organizations, we've all had our challenge. We've had challenges. Like a number of organizations have challenges, and kind of, United Way is another good organization. Again, I'm not being paid by any of these to mention them. United Way, I had volunteered in the past and on one of their board where they actually divvy up the money. So lots of United Way is a big fund. Like they sponsor a number of other organizations. So organizations who don't do their own fundraising can go to the United Way, and the United Way gives them money. Women's shelters and different organizations do that, where they go to the United Way to get funding. So United Way. The nice thing is, again, just it doesn't have to be, but if you do donate more than $20, you get a tax receipt. Tax receipts are nice because you can claim it on your taxes. Now, if $20 or more is a bit tough for you financially, organizations appreciate $5. I'm just saying, if you do $10 or more, then they'll actually give you a tax receipt. Just as a quick tip, unfortunately, unless it's a registered charity, you can still make donations to, like if somebody's doing a GoFundMe, you can still do that, but it's not tax deductible, because a lot of GoFundMes are for personal. So what happens is you don't get a tax, like they're not claiming it as income, and you don't get a tax receipt. Doesn't mean that you don't still make a contribution to someone's GoFundMe. I'm just letting you know from a tax point of view, GoFundMe contributions are not tax deductible.
Oh, and Wayne,
Yep.
Also, if you donate to American charity, it's not deductible.
Unless you have U.S. income. So if you have U.S. income, you can make a contribution to a U.S. charity, but that's a great tip. Thank you, Maureen. Because one of my clients did make a donation to kind of the charity here in Canada and to this, like a similar charity in the U.S., and it sits there as unclaimed. You don't lose it, but it sits there until he potentially has U.S. income to deduct it against.
But if you don't have any U.S. income, then there's no point in, you can't claim it.
Correct. Right? Yep. But someday you may, again, never say never. Somebody like Maria may decide to go back to the U.S. And I have 3 of my nursing clients are now working in the U.S. and have U.S. income now because they're doing contract work in the U.S. So yeah, but you're 95%. You're correct, and just there may be that one person that has some cross-border work and has both U.S. and Canadian income. So donations. Now here's a little tip. Something it's not a cheat. I did this recently. So one of my tax clients, it's a friend from home. I think I've known her since about kindergarten. We kind of got not disconnected. We kind of follow along on Facebook, and then I reached out to her earlier this year and actually had a conversation with her. And she surprised me, she didn't really know what I did. How many people don't really, like, your family or friends don't really know what you do for a living? So she didn't realize that I did taxes, and she was actually looking for a new tax accountant, and she became a client. So easy, great. It's going well. And so for her birthday coming up in a couple of weeks in November, she's actually doing a fundraiser. She's doing a cabaret night. She's actually a professional singer. She is an actress in like Mervis Productions, and she's doing a cabaret night in November 20. I think it's the Monday, the 28th. I think it is of November in Hamilton. If anyone wants to come meet me in Hamilton, I'm going to be in Hamilton. So what she did is she was selling tickets. Now I could buy a ticket, and that would be nice for me to support her and go, even if I don't go, to buy a ticket and support her. I could do that. that ticket's not tax deductible though. Now, not everything we need to do is tax deductible, doesn't need to be tax deductible. However, if I sponsor her event, and she actually did offer sponsorships, and I did sponsor her. So for 200, so instead of $25, so for $250, I get 2 tickets, plus I get my name mentioned in her both print material and her online marketing material. And so Dwayne Richards CPA is the sponsor. And therefore, that $250 contribution is not a donation, because a donation is nice, but a donation's only, I only get a percentage of the donation, right? Like a donation, you don't get the whole 100% tax deduction for donations, you get the donation amount. But because it's a marketing sponsorship, because I'm marketing my name, I'm going to deduct the whole $250. So my tip to you is, if you're a business owner, look at opportunities to be a sponsor as opposed to just being a donator. If you just donate, it's a donation. So you can donate to a charity, but it's a donation. If you do a sponsorship, it can be treated as marketing and therefore 100% tax deductible. On that note, so donations is tip number 4. How are we doing? Pretty good. Just check the time. We got 10:02, so we got 10 minutes to get breezing through this last one, which shouldn't be too hard. Number 5. Now Teresa's kind of put a couple. Teresa has put one in there that is a pretty good one. Discussion about employment expenses, automobile expenses, kilometers, and allowable. Yep, we can definitely touch on that, Catherine. Just looking to see what else people are saying. Dividends. Okay, let's get into number 5. So number 5 is, drum roll. It's just looking at your expenses to say, is there some stuff that not necessarily can you prepay, but you could prepay? So one example could be your car. So if your car is about to need an oil change or some car servicing, if you get that servicing done in December, you get to expense it in December. If you wait till January, you still get to expense it, but you got to wait 14 months, got to wait till the following year's tax return to potentially get some money back on that, including your HST that you pay on it if you register for HST. If you do that servicing in the month of November or December, you can get that HST money back as early as like February or whenever you file your HST return. So there's some things, so a number of different things when you look at your office expenses. So it could be office supplies, if you're a tax accountant like myself or Maureen, and you send out some mail, so you could, or Maria, you could restock your office supplies. You could restock your envelopes. You could buy, people still print paper. If you still use a printer, you could buy some printer cartridges. You're going to use them anyway. You could buy some paper. I don't print. I rarely print, so it doesn't apply to me. Also, but if you're looking at a capital purchase, I did this last year, was I actually purchased a new computer at the beginning of December. So then I'm actually able to recognize a portion. Sometimes there is that, depending on the purchase and what it is, there may be the half year rule may apply, but still you get half the expense and only had it for 1 month, but you can still get half the year expense on it. Car expense, so car expenses, office supplies, any capital purchase. So if you're going to buy some new furniture for your office, you could do that in December, and you can start triggering the depreciation on it. Happens this year. Office supplies, marketing. So maybe you buy some pens. I bought these about 3 years ago. Got pens with my name on it, but I could purchase those like in December and wait and give them out in the future. But it gives me a tax deductible expense in November, December that I can use on my 2022 taxes. Ooh, all right, who liked that one? And was that news to someone? That was probably common knowledge. That's okay. Sometimes we just need to be reminded. What about Christmas party? That's a good one too. Just remember, if it's a party, it's most likely going to be deemed as meals and entertainment. So you can still claim 50% of it. Can we rewatch it? Yeah, you can definitely rewatch it. I am recording it. I will probably put it up onto YouTube. I have a YouTube channel. So I will put it onto YouTube so that it's easy to watch. Also, if strange people find me on YouTube, they can watch it. Yeah, and then I can send out a link with the link to where it is later. Yeah, that's okay. Sorry, as a client, that's okay. No apologies needed. I appreciate your people stopping by. Group events for staff. Yeah, so that's true. So if it's always good when I have other accountants in the room. So group events for staff can be deducted 100% of meals if all staff are invited, because then it becomes a staff event as opposed to just a Christmas party or a client event. It's true. That's nice, 6 times a year. So especially, I was actually on a CPA event both yesterday and the day before, talking about money and kind of the world economy and some different things. And obviously, employee retention is a real challenge because there is a labor shortage out there. And sometimes when we just go for like money can be short-lived. So yes, they like the pay increase right away. And then about 5 minutes later, they're like, what's next? Doing employee events, which are tax deductible, just like salaries, you do them up to 6 times a year, there's a different value. So my partner works for one of the banks. They're doing her team, they're doing a Christmas, and I think they're going for lunch as a department. Needs to be filled out so employees can claim expenses. That is true. The T22. So because it's a little bit more Wild West now because of the working from home tax credits, that more T22s are being issued than before. Back like 4 years ago, T22s weren't really issued. As more for sales people that got T22s to T2200s, but now it's a bit more common because there are people working from home or having to pay for expenses. Yeah, so it's a little bit more bookkeeping for business owners, for payroll specialists to make sure paperwork's done.
Oh, Dwayne, another tip
Yeah.
I didn't hear was when you have a non-registered investment account, you can write off the investment counsel fees.
That's true. Yep. So including yes, that's true. So if you have so generally what happens is it has to be you have to be earning income. So yeah, so if you're issued like if you're issued a T3 or a T5, so you're having investment income, then you can write off expenses against the investment income. Also, just a quick tip in case you're new to the room, if you pay someone to do your taxes and you're a business owner or you have rental income or also investment income, then your the cost of having your taxes prepared is also tax deductible. So if you have one of those 3 categories of income, business income, investment income, or rental income, then you can deduct, say, my fees if I were to do your taxes. All right, let me just put, shoot, 1 second. I'm just going to put in my link to my calendar link here in a second. I tried to do it and it didn't do it right. This time, control value. There it is. There you go. Prep fees deductible on employee. That's a good question. With employees with T2200s, I don't think they.
I don't think so.
Unless sometimes they're
not a business.
Sometimes there is if you're like a commissioned employee, but that's a good question, Kent. I will search it out. I will search that question out about tax fees for employees. Yeah, it is on the 777, which is for rental income. So that's a good question. Okay, so for anyone that is still hanging around today, so I dropped in the comment section. That's my calendar link. It books a you can book it says 15-minute. We can talk longer. Don't worry. It's not just for 15 minutes, but it's my 15-minute call calendar thing. Makes it super easy. You just click on that, get access to my calendar. Look at Gregory. So he's on the ball here. He's putting in some contact information. Yeah. So if you hear, you're more than welcome to drop if you have some super handy contact info, you want to share it with others in case they, Greg was a little bit late this afternoon. He didn't get here on time. He kind of missed the roll call. But Greg is one of my colleagues. Greg and his wife are mortgage specialists in the province of Ontario. They're located here in Toronto. So if you have some mortgage questions, you're more than welcome to reach out to Gregory. Thought I had a checklist of all the things I wanted to get done today. I think I did okay. People sent me the WhatsApp message, so I will, once we're done, I will do a quick search there. Oh, that's great. Because about the immigration, I'll reach out to you to learn a little bit more about that. I am recording today, so I'm going to stop recording here in a second. Sometimes I forget to stop and then it goes on forever. Stop recording. Are you sure you want to stop?